Okay folks, welcome back to another update for natural gas. Now the charts are showing the gas market is still bearish, at least on a daily time frame. We'll include some back testing which demonstrates how you could have traded using one of two strategies. So don't forget to hit that like and subscribe button to support the channel. Before we proceed, if you haven't already done so, I strongly encourage you to invest 24 minutes of your time and watch the +1 video entitled Follow the Trend with Average Down. This clearly illustrates how to trade with almost any indicator profitably. I use this approach in all my analysis when reviewing instruments, including today's review. Links are in the description below. In terms of the outlook as of today, July 10, natural gas market prices have stabilised around $3.50, with storage levels increasing by 58 to 3,000 BCFs, indicating ample supply. Demand factors: US power consumption is projected to reach record highs in 2025-26, driven by sectors like AI, data centers and Bitcoin mining, which favour natural gas for its reliability and affordability. Supply dynamics: despite a 10-week decline in active rigs, US natural gas production is expected to increase to 105 in 2025, supported by higher prices and improved infrastructure. Global trends: Turkey are rapidly transitioning to clean energy, reducing reliance on natural gas and potentially impacting global demand. ETF performance: BOIL, which is 2 times long, and UNG unleveraged have experienced declines, while KOLD is 2 times short, has gained, reflecting recent bearish sentiment in natural gas markets. Investors should monitor weather patterns, storage levels and global energy transitions, as these factors will influence natural gas prices and performances related to ETFs. So looking at the long-term trends, first thing to notice here on the monthly chart, even though the price is still above the moving averages, notice the moving average band is starting to turn, but more importantly, the CCI1500 has broken into that moving average band, giving us a somewhat neutral positioning. So not long positions to be taken at the moment on any time frame. On the weekly, it's already broken below the moving averages of both the price and the CCI, giving us a bearish momentum. Also notice here on the monthly, we've got this fair value gap that hasn't been penetrated yet. Likewise here on the weekly, all these other fair value gaps have been penetrated in subsequent candles or their wicks. So we might have a bit of a downturn to play out. Again, this is more of a long-term play for the monthly and weekly. On the daily, if I zoom in for a moment, we've got a fair value gap up here, but first off, we look at the trends, and the price and the CCI are both below the moving averages, giving us a bearish momentum, so only taking short trades on the intraday time frame. You'll notice here we had a fair value gap that's already been penetrated currently in the last couple of days. So that's already actioned, and now we've got this point up here. So we possibly might see a bounce, and it could take days possibly to reach this fair value gap, or even weeks. So we can't tell for sure, but at the moment it's actually penetrated this lower fair value gap. So if you go to the intraday time frame, got the daily here as a reference, so taking short trades only. And since our last video, it did bounce initially with the price and the CCI breaking higher, although you should not have gone long. You can see there that was a very somewhat weak bounce, and then it eventually broke down again, and you should have taken short trades once the CCI and the price broke below their respective moving averages. And it possibly could still be in the trade, because you can see there on the daily the CCI hasn't broken into that moving average range, so possibly stay in the trade. But at the moment, depending on how risk averse you are, you probably should have taken some closed out some positions. The first one you should have closed out at that point if you're a bit cautious, and then re-enter it on that candle there, and then close it out again on that candle down there once that CCI broke into the moving average range. Again, don't go long until we see the price and the CCI on the daily break higher. Now going to the back testing, look at the short positions. If you had gone short from that period back there around about the 24th of June, this is a stop loss approach, and this is the average down approach. You can see the stop loss has generated about $2,500 in revenue with those respective gains or trades, and the average down approach has generated a total of about $12,000. That's assuming you stayed in the trades of those respective strategies for the whole period. Alternatively, if you want to be a bit more careful in your trading, you should have paid attention to any divergence. In this case, we had a bullish divergence down here. That was your first indication of a stop, and you should have closed it out once the price broke above the moving average range, and you would have got out somewhere around that period, and that would have given you a small return on both those strategies. And then re-enter it again re-enter short positions once the price and the CCI broke below the moving averages, again closing it out there again with a small gain. Avoid going long, and then enter another short position again when they both close down. And again, as I said, follow that same pattern. Now, if you follow the trends video, you can almost trade any strategy. I'm using the CCI150 here, but in the video I'm demonstrating the CCI14 and even some moving average crossovers. So again, you can use almost any indicator to trade that strategy if you follow that video. But again, at the moment, avoid going long or short until we see the CCI break lower below those moving averages on the short side. So for BOIL, first off on the monthly, is very bearish below the moving averages. Again, you've got a fair value gap up there. It hasn't been penetrated yet. There's no CCI for it, so bearish momentum on the monthly. On the weekly, likewise bearish, both the CCI and the prices below the moving averages. Although notice up the top here on the weekly, we've got these fair value gaps, so we could possibly see a bounce. Again, this is a long-term play for both the monthly and the weekly, so don't go placing long orders based on those. On the daily, again, we look at the first thing we look at is the momentum against the moving averages, and both the CCI and the price are below the moving averages. And notice I've drawn these two diagonal descending trend lines some time ago, and it's still trending in amongst that range there currently. And again, more fair value gaps there up in the longer term period. On the intraday time period, we'll go first off to the 1 hour time frame. So again, taking predominantly short positions, what we look for is any divergence. And you can see here actually the natural gas price didn't have this, but this on BOIL it does. We've got a slightly higher lows on the CCI versus lower lows on the price. That's a bullish divergence, which means the price will likely bounce from there. Now for that to take effect, I'd like to see that break higher to hit the target like it did back here. And that's assuming it was to start bouncing from this point. The CCI has already broken into the moving average range. I'd be drawing a Fibonacci from that low. Typically, I take it back to the recent high. You can take it back to that range there. So the minimum you can expect is that level there near the moving averages. But in this case, I'm going to give it a bit of a stretch and take it up to that level. So I'm going to put in a target range in that 23-38% range as a potential bounce. And that's assuming it bounces from there. It could, of course, drop further. So long as the CCI keeps rising from there, which will be, and that price keeps dropping, it'll be a bullish divergence. At the moment, it's currently bullish, and it's the start of a play there. KOLD on the monthly, we've got this bearish momentum on the price below the moving averages, but notice the moving average band is very narrow. That's a sign of potential consolidation, whereas the CCI is giving us a somewhat bullish momentum. Also notice up here, longer term, we've got these fair value gaps up here, which haven't been penetrated yet. So you may possibly see the price rise into that level for KOLD on the monthly. Again, they're long-term plays. Don't go placing long orders on them yet. On the weekly, we've got a fresh breakout to the upside on the moving average band, and also the CCI is broken above as well. So that's giving us a bullish momentum. If you're trading on the daily, should be taking long trades only. And on the daily as well, we've got this bullish, we had this bullish divergence on our last video versus lower lows on the price, and that's actually bounced and hit our minimum target range, and that would have been a Fibonacci range between that low and that high, the 23-38% range. But since then, it's broken right through the 61% level and approaching the 100% retrace level. So we'll keep an eye on that. But at the moment, somewhat very bullish momentum at the moment on the daily. Going to the 1 hour chart, again, taking long trades only. You can see here the hourly is also trending higher with the CCI and the price moving higher. Now you'll notice if you're trading each of these, you'll be closing out positions. This is the hourly. You'll be closing out positions at the smaller time frame when the CCI touches the moving average band. You can see there it closes it out earlier before it breaks. If you wait for it to break below the moving average, most of the time you lose a lot of profitability if you waited for that candle. That's why I like to close it when it touches the CCI moving averages like it did in this case. Another long entry there, and again you would have closed it out near the high there. You would have made a few pips on that one rather than waiting for it to touch the moving average band there. However, if you want to stay in a trade on the daily, based on the daily, the CCI on the daily is still hovering above the moving averages, so you can stay in a trade that way on the daily. And what you do in that case, you look at for any divergence. Now at the moment, there's no divergence on the hourly. There was a bullish divergence back here, and that bounced quite nicely, and that would have given your first signal to go long, especially in conjunction with this bullish divergence on the daily. So UNG is showing us bearish momentum across all times. The monthly, the price and the CCI broken into that moving average range, or the CCI is broken into that. The price is already below. The weekly, likewise, below the moving averages on both the price and the CCI, and the daily, likewise. There is a very long-term play up here with these fair value gaps on the monthly. There's one up here for the weekly as well, and that was after had a bullish divergence back here. That already bounced up there as well, and so it do so on the monthly. On the daily, after having a bearish divergence back here, it kept dropping, bounced through that moving average range, and then continued to drop from there on. So at the moment, there's no divergence that I can see on the daily. Going to the 1 hour time frame, using the daily as a reference, taking short trades only. What we're looking for is a bullish divergence, and you can see one there. Again, slightly higher, almost double bottom on the CCI, slightly higher lows on the CCI versus lower lows on the price. That's a bullish divergence. Again, very early days yet. If that's to bounce from there, and of course it could go a lot lower, if that is to bounce from there with a bullish divergence, then we draw a target range on that as well, to that high level, to that point there, similar to the natural gas price. That'll go somewhere in that 23-38% range. But like I said, that's probably a bit too early to draw at the moment. This price could keep dropping. So long as that price drops and the CCI keeps rising, we're going to consider that as a bullish divergence, and we'll just have to readjust that Fibonacci target range. So if you're new to trading, would like to deeper dive into the simpler explanation of the analytics, we are now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.